talk about a little bit about liquid investments backed by real estate. A lot of clients are interested in this type of strategies right now because they know that they cannot leave the money in the bank sitting, earning no interest. But on the other hand, they don't want to be in the market either because they know that we're going to have a lot of volatility in the following years. So what's left? Well, real estate. Real estate could offer very good returns, fixed returns backed by real estate and fairly liquid. So the first two options we're going to talk about are two of them, private loans and residential development. Let's talk about first about private loans. Private loans are backed by investors. They are investors in real estate that all the time they are buying properties, they are fixing them, and they are reselling them, or they buy properties, fix them, and keep them as a rental. These investors usually have all their money invested in real estate, and usually they don't have liquidity, but all the time they are looking for new opportunities. So they need liquid money fast. And what they do is they offer a collateral to a private lending company that specialize in this type of projects. So this developer will offer this private company, let's say a property, and this private lending company will send an appraiser, an independent appraiser, to verify the value of the company. Let's assume of the real estate asset. So let's assume the asset is worth $100,000. The maximum they are going to lend this developer is between $50,000 and $70,000. They are going to keep a property as collateral that is worth $100,000. And because of this loan, this developer is going to be paying them monthly interest. Then we have our clients that have liquidity. They have money sitting in the bank and they don't want to leave it there. So they want to put that money to work. So they lend the money to this private lending company. They cannot lend the money directly to the developer because this private lending company has licenses and has regulations that need to be followed in order to have these private loans. So this private lending company will assign the collateral that the developer gave them, backing up the money that the client is lending them. And they are going to be paying the client monthly interest. When the developer pays off the loan, then the money has to be returned to the client, regardless if he requested the money or not, because the collateral needs to be released because now the loan has been paid. If the client says, well, I don't really need the money now, we still need to return the money. And if they want to reinvest it, then we can have another project with another developer, another collateral, and another set of documents. So this option, you can start from $20,000 and up. It's very liquid. They are paying you interest monthly. The capital is refunded when the loan is paid or when you request the money. Your minimum term is only 6 months. And you can request the money at any time after 6 months. You just need to give a 90-day notice so the money becomes liquid. So let's say you're going to need the money in month 6. In month 3, you request the money, and in month 6, the money will be liquid. These are the interest rates for this type of very liquid projects. The rate is according to the amount invested. So if they invest $20,000, it's 5% annually, but the interest is monthly. $30,000 is 5.25, 45,000, 5.5%, 65,000, 5.75, and 100,000 and above, 6%. Usually the loans last between 6 months and 24 months, but really your only commitment is 6 months. And after that, you can request the money at any time. You can leave it there if you want to, or you could request it. We just need to give a 90-day notice. The second option is residential development. Right now, there's a lot of need for housing. We worked in Texas, in different cities in Texas. Right now, because of the current market conditions, we have a lot of projects in Houston. And we are invested in very specific projects. These are townhomes that have a final sale price between $300,000 and $400,000. These are gated communities. Depending on the size of the lot, they could have 20, 30, 50, 80 or more townhomes, but they are always gated, modern looking, around 2,000 square feet, more or less. And why are we invested in this market? Because this market has a lot of demand. Who is seeking this type of properties? Young professionals, couples without children, investors in real estate that want them for rentals, or empty nesters, people that, you know, their children are already left for college. They don't need that big house in the suburb with maybe a big backyard, a pool. They don't need that maintenance. They want to move closer to the city. All these projects are between 10, 15, maximum 20 minutes from downtown, from the medical center, from the financial center. So they want to move to these type of properties to be closer to the opera, restaurants, the medical center, etc. So how do these projects work? Well, the most challenging part is to find the lots, because lots are very demanded, and especially in these areas of town. So the developers will buy the lots in advance. Of course, they will demolish the old properties and they will develop the lot. Then our clients will come that have liquid money, and they will lend money for the development of that project. And they, of course, they will give them a promissory note. They will also assign them lots of the development to back their money. They will give them guarantee the assets as a guarantee the assets of the development company, and also a personal guarantee. Once the properties are sold, the money is returned to the client plus their interest. Now, because we bring a lot of money to these developers, we negotiated something special for our clients. Let's say that the project lasted 10 months. In month 10, they're going to return the money to our clients, but they are going to pay them the interest as if the money was invested 12 months. So the rate of return is going to increase. Now, if the project lasted 18 months, well, then in month 18, they are going to give them their money back plus the interest of the full 18 months that the money was invested. In these projects, the minimum is $100,000. The capital is refunded when the properties are sold, guaranteeing, as I told you, 12 months of interest, or the interest of the number of months that the money was invested. So these are the current returns. For $100,000, it's 9%, 125, 9.25, 150, 9.5%, 175,000, 9.75, 225,000, 10%, 275, 10.25, 350, 10.5, 425,000, 10.75, and $500,000 and above, 11%. These rates are going to become effective as of November 1st. The project usually lasts between 12 and 24 months. So let's assume the person was invested at 10%. If the project lasted 24 months, which is the maximum duration, then in month 24, they are going to receive their money back plus 20%, 10% per year. Now, in these two options that I presented, the client is not running the risk with the builder. They have a fixed return that it was pre-established, and because they are acting as lenders, not as investors. In the following options, now the clients will be acting as investors, so they will be running the risk with the builder. In this case, clients that would like to invest in conjunction with the builder, they could do it. They have the peace of mind that the expert will invest 70% of the money, and they will only invest 30%. In these projects, the minimum is $250,000. There are no fixed returns. The investor will participate in all the profits of the project. And historically, these projects have been giving a double-digit return, 12, 14, 16, 18%, depending on the market conditions. Now, if the client would like to be the owner 100% of their project, we could do it. We could put together a team for them. We will connect them with a real estate agent that will buy the lot for them under their name or under their LLC, their company's name. They will only hire the builder to develop the project. There could be the option of financing. We have connections with financing companies. Some of them could even provide financing to foreign nationals. So they purchase the land, 100% of the profit and the risk is the client's. They have the possibility of getting financing if they fulfill the requirements. And historically, again, these projects have been in the double digits, 12, 14, 16, 18 or more. Now, when the client would like to invest more than $1 million, then we would like to find out what exactly are the projects that he's looking for and what projects are available according to the amount of money that they want to invest. But usually, clients invest in industrial parks, in warehouses, in multifamily buildings, or commercial projects. Now, what are the areas of opportunity? As I said, we specialize in Texas. We have work in Houston, Dallas, Austin, and San Antonio. Because of the current market conditions, Houston is right now where we are investing, but that could change at any moment. Dallas and Austin right now the prices are higher, and San Antonio is not having the same growth as Houston is having. Why do we specialize in Texas? Because Texas is a state that is very stable in the real estate. We are the largest state, so land is affordable. The cost of living is affordable as well. We don't have state tax. We only have federal income tax. And because of that, we are not only having immigration from other countries, from Europe, Latin America, Asia, we are also having people from other states moving to Texas. From New York, from Colorado, from California, from Florida, or other states. As you know, now the new Silicon Valley, instead of being in California, is in Austin, Texas, precisely because of the the low taxes. It's way more effective for the companies to operate in Texas. And because of that, we see a lot of opportunity here, a lot of growth potential, and that's why we specialize in Texas. What is the experience that the builders that we deal with, what is the experience that they need to have in order to be our providers? Well, they need to have extensive experience in land development, in single family residence and remodeling and construction, also in multifamily building purchase, management and resale, and also in residential subdivision development. Now, they need to have an impeccable track record, at least of 30 years of experience. Some of these building companies have not only built here in the US, they have also built in Mexico. They need to have a minimum of $100 million in historical transactions and a minimum of 500 residential and commercial real estate transactions. So what are the benefits of working with Exfinia? Well, first of all, we are independent. So we have access to about 65% of the financial industry. Why 65% and why not 100%? Because we only deal with companies that have ratings of A+, and above. We don't deal with smaller companies or not companies that are not financially strong. So that's a big, big peace of mind for our clients. And they know that we are going to find what the best option for them is. There's a lot of transparency. The client will never give $1 to Exfinia. The money is invested directly from the client's account into these financial institutions. Most of them have been in business over 100 years. The client has access to their account online. They receive their statements. They have access to the 800 numbers of the financial companies. Exfinia is only the brain that puts the plan together and is giving them the service every year, so they don't need to be calling 5 different 800 numbers to see who's answering the phone. The client doesn't have to pay us. The providers that we represent, they are the ones that compensate us because we are the ones bringing the client and we are the ones giving them the service every year or as they need it. We have a fiduciary responsibility. What does that mean? That means that we are obligated by the licenses that we have to always put the interest of the client first. So that's another big peace of mind for the clients, knowing that we are always going to act in their best interest. And we are licensed and regulated, of course, here in the US. By attending this webinar, we are going to give you a gift, which is a complimentary financial planning consultation. Is usually worth $1,500, but because you attended this webinar, we are going to give it to you at no cost. All you have to do is to schedule an appointment with us in the next couple of weeks, so you can have access to this full financial analysis at zero cost to you. So this is our contact information. Feel free to contact us, make an appointment, and we will be very happy to help you. Thank you for your attention, and we'll stay connected.